Hi guys. So we'll start today's analysis. We'll straight away start from the global markets first because a lot of news has come from the global markets and it's all impacting our markets and probably it will impact for another 1 or 2 days. So we'll just start from the global market. So first news which came yesterday was the inflation report. So US inflation report was actually higher than what was anticipated or what the probably the census was. So the inflation report came month on month on a 0.5% increase, where the expectation was only 0.2% increase. The yearly rate of increase of inflation, CPI inflation, was around 3%, whereas the expectation was 2.9%. So it was a very hot kind of an inflation report. We've already seen the labor report wherein the unemployment rate came down from 4.1 to 4%, and also the hourly earnings went up of the labor, which means labor market is tight and good, and it is not allowing the inflation to come down, which is creating problem. Because of that, the bond yields increased sharply yesterday. It touched around 4.63, 4.64. Now it is hovering around 4.6. The dollar index also tried to inch forwards, but it could not retain, and it actually closed in red, and today also it is in red. So we'll discuss about dollar index and bond yield going different paths in just a moment, but I'll just give you the data first. So that is about the inflation part, which came from the US thing. Now, what has this inflation report done? It has actually removed any possibility of rate cut in March policy, May policy, even in July policy. Now the market is not expecting any rate cut before September. So everything has shifted to now second half. So we'll not be having any rate cut. It will have slight impact on India because we generally like to maintain a differential in terms of interest rates of US and India, because that's how we want the money to come in India, because we're giving higher interest rates. So debt money we are actually interested, and that only comes in once you have a differential interest rate between US and India. So if at all we go for another rate cut in April in India, the differential will further reduce. It might reduce some money inflow in terms of debt market, but we'll see that. As of now, it's not happening. The debt money is still coming to India. Now, one more thing which is interesting has happened is that as soon as the number came, within I think half an hour, we got a tweet from Trump, and he told that interest rates has to come down. Mr. Powell has to reduce the interest rates to counter his moves of tariffs. Now, what does the statement mean? It means that he wants the interest rate to go down so that whatever is the damage which will temporarily be done by his tariffs is actually offset by his interest rates cut. Oh, that's a very big statement. That means Trump is actually in a fix. And why I'm saying this is inflation, before even getting the impact of his tariffs, is already inching upwards. Whatever sanctions or whatever tariffs he has done on steel and aluminum, those effects have still not come. They'll be coming in forthcoming quarters. Before that, also, we have started feeling the heat of the inflation, and this inflation will actually keep on increasing. And the kind of relationship with Mr. Powell and Trump has, the first day itself, Mr. Powell said he cannot remove me. I have been elected on a constitutional basis, and he has to amend the constitution to remove me out, which means that interest rate will not go down, and that will put now additional pressure in the minds of policymakers and Trump, how much tariff to put, when to put, and the softer stand in terms of negotiations. That is the change which has happened because of yesterday's thing. So it's a big thing which has happened yesterday. It's not a small thing. Powell testimony is going on. So I think second day was yesterday. So he told the same thing, that labor market is tight. We're happy with the economic conditions. The economy looks strong, and we are not in a hurry to reduce the interest rate. So he's on the same path, and he will not change. That means US will not get any rate cut before September. Now, the futures were down. As soon as this inflation report came, the futures were down on 450 points. And when the actual market started, the first session, the first hour, Dow was around 500 points down. And Nasdaq was also around 200 points down. But both of the indices recovered very sharply. And Dow closed only 200 points down. Nasdaq actually closed in green. Now, this is a problem which is occurring to me, that the markets are too resilient, the markets are too complacent to absorb such kind of negative news. If this would have been a Biden administration market, we would have seen the US markets to at least fall by 700 to 800 points, if not more. So market is probably resilient and market is probably conservative, or let's say market is taking into effect a lot of things will Trump will do in terms of easing and the profit earnings which it will result into the companies. I don't know whether going to happen or not. If it does not happen, this market, US market, is actually overvalued. Nasdaq is really overvalued. The kind of these seven stocks which are they're taking the index higher, and the kind of development which is happening in DeepSeek in China and other things, and the kind of AI's development or the investment, or let's say what kind of R&D is happening around the world now in AI. I think Nasdaq will be in a big bubble territory, and US markets are looking like in a bubble territory now, because yes, there's earning support, but there is too much into the price. It is now we can say it's almost priced to perfection, and that's not always good for the markets. So that is one thing you keep in mind. I think the next kind of drawdown will only come from US markets. So, another good thing happened yesterday in terms of that Trump has spoken to Mr. Putin to end the war. Mr. Putin has shown a very strong inclination of putting an end to the war. He has now a definite plan, and probably the negotiations will start very soon. That is again a good news. Uh, the crude oil reacted to it, and I think it was around 2.5% down yesterday. Today also it was trading lower, and now it is trading below $75 once again. So with all these things happening, we will not see now a crude inching up very fast. And anyway, if the sanctions are lifted from Russia, it will add another 10 million barrels per day kind of a oil into the market. So, there'll be a lot of supply, and the markets probably will discount all these things, and the prices will remain lower. I would not be surprised if the crude oil prices reach to $70 or even below that. It is looking in that kind of a condition as of now. We're already seeing Israel Hamas war actually closing off. This also is on the flag end, and we'll see gradual negotiations to happen. It may take 5 6 months. We'll see, this war also coming to an end. So that's a good thing. Once again, for all the world markets, including India, more so for India because we are the importers of crude. So that's another good thing. Of course, EU has not liked this, Europe has not liked this, and they told that they should be part of the negotiations. I don't know whether Putin or anybody else, Trump, etc., will agree to that. They also told that we'll continue to protect Ukraine even if there is a condition that within in the negotiation that uh, Ukraine will not be a part of NATO. They will still continue to support Ukraine and protect them in case of any war. So that was one or two speeches which came, but that's again just a reaction. They are actually not happy with what Trump is doing with respect to this war with Russia. Uh, Trump also said that Ukraine, being a country, at one point of time, they should actually become part of Russia. He has gone forward to say that. So you can imagine the kind of intense talks between Trump and Putin would have happened. Mr. Putin have actually invited Mr. Trump to come to Russia. We don't know when he will go, but a telephonic talk has happened in the right direction. Anyways, we know that Trump and Putin are anyways friends, so I don't think this will drag too much. The advantage now will be shift of political power now, the world power in terms. Previously Russia and China were coming together. Now again, China will find himself very alone now. Because Russia, if they're joining hands with America, Europe, anyways, whatever it is, threats are still close to Trump. So why I'm saying all this is because these are all positives for Indian stock markets. It might not be positive for any other market, but for Indian stock markets, all these news are positive because these all factors were affecting our performance. So that's again a good news. Now, so that's another point. Let me now. I was talking about one thing that the dollar index has come down, and the bond yields have gone up. So bond yields have gone up because they are reacting to the interest rate scenario, and which is actually right. But the dollar index coming down, it means that now the flow of dollars, or everybody who was buying dollars, will now become circumspect. They will become cautious. The reason is very simple. Now the free hand will not be there in terms of Trump to take his tariffs war very fast. He will still continue to do it. He's an anarchist, and he does not. He wants to leave a legacy behind, probably his last term. But there'll not be any free hand to him because the impact will be very severe into the US markets and consumers. See, he wants to make America great again, MAGA policy. But this way, he'll not be doing any good to the consumers of US. One more report has come just after the inflation report that if the tariffs are implied on steel and aluminum, the rate of the cars will go up by $6,000. So very high inflationary point, because the in the basket of inflation in US, this car prices also form a dominant part, is in apart from food and all those things. So it will not be easy, and things are not looking good for Trump as well if he's doing too severely all these things. So probably he will come into a negotiation kind of mode very fast. So that is why dollar is reacting, and that is why dollar index is coming down. It is now realizing that whatever Trump has told will not be so easy to implement, and we should not rely only on the American markets now. And that's again a good news. Once you start deciding that the US markets have top out, once you start deciding that the dollar index has topped out, that's a very good story again for the emerging markets, because if the dollar index has topped out, the currency war will only be, it will happen spikes, but it cannot top those levels. So, for example, rupee, as I've been telling that it will, the economists are telling it will not go beyond 88.5. See, we are today also it was slightly stronger, 5-10 paisa. So the issue is now that the currency war, at least in Indian context, we will not expect those uh, levels to go below 88 and 88.5. So now the FIs they know the bottom where the currency war will take them to. And the dollar index coming down means that the supply of dollar is coming, the demand of dollar is decreasing, which means inflows will start happening in some other markets now. Which market I don't know. We'll see later in our video why I'm saying India. But dollar index coming down is a very good news, and it is divergent to the bond yield. That's again a good news, which means inflow of money to US will now slowing down or coming down, or the hedge funds bet on dollar is coming down. They're releasing those trades now. That's a great news. Uh, Another news came in the morning that pharma and auto. This news has come from their I think advisor to you to Mr. Trump, Johnson, I think, and he told that he has advised Mr. Trump not to put tariffs on pharma and auto. The reasons are very simple. Auto, as I just now told you, it forms a very important component in the basket of inflation. And if the car prices or any prices goes up drastically, it will be a negative sentiment on the consumer and Mr. Trump administration. Moreover, uh, uh, this particular part of Mike Johnson also taking out pharma, because there's a big scarcity in terms of medicines and essential medicines in US. Manufacturing is not happening, and they are very dependent on the imports of these pharma related things. And that is why I say pharma will be a big story going forwards. In fact, I generally do a series on multi-bagger stocks. I think my fifth or fourth stock, I don't remember, it was Markson's Pharma. At that time, I very clearly told pharma sector today is actually looking, sorry, pharma sector today is actually looking where the IT markets were there in 2000. So pharma sector will boom like anything in India. This sector is going to remain. Do not come out of good stocks in this particular sector. This is a sector of the decade, probably a century. Lot of dependencies there now of cheap labor and the R&D and the kind of establishment we have in India. Many of the Indian pharmaceuticals anyways have plants in US as well. So whatever Trump is saying that if I will reduce the corporate taxes if you're manufacturing the things in US, that is also added advantage to the Indian companies who have factories or manufacturing units in US, and there are a lot of Indian companies. So mark those things. Be careful on those things. Pharma will be a story like IT has done for last 30 years. Make mark my words. So now so again one more thing which has happened in now this is about the global thing. So now we come to our so today again Trump and Mr. Modi will be meeting, and let's see how the meeting goes off. I think 11:30 Indian Standard Time will start the meeting, and I think the press conference is scheduled at around 1:30 in the morning as Indian Standard Time. So let's see what the news comes from there. I think it will be positive. The way our Commerce Minister, Mr. Piyush Goyal, was laughing and his pictures were being shown, and the kind of confidence Indian government is showing, I think the meeting is pretty good. And what was expected was that a lot of negotiations and a lot of decisions will be done before Trump and Modi actually meeting. So I think that would have been many things would have been already in place. Let's see how it goes, and we see the final press conference at 1:30 a.m. And this will going to impact tomorrow's market drastically. Anyways, today we are expecting a news in terms of reciprocal taxes from Donald Trump. I think the date is today. Let's see whether it happens or not. And India related thing, whatever has happened, we'll also be flashing the news tomorrow. We'll be coming to know what has happened tomorrow. It will have a great impact on Indian markets. It will have on the world markets, but it will have a big market. It will have a big impact on the Indian markets. I already told you yesterday that reciprocal taxes in terms of the difference of trade. India is actually number one in Asia. We are exporting a lot and importing less from US, so our differential is the highest. So we are vulnerable to the taxes or the tariffs from US. So that we should be careful, especially in EV segments and some other segments, which I think Trump wants India to reduce their tariffs drastically. I think India would be asking that we'll take a lot of oil from you. That's okay, and we'll start reducing our oil from the Saudi Arabia. That will be the appeal from India. Let's see how it accepted from US. So this is about the global markets. We'll come to the Indian markets. Indian market also, we had a great news yesterday. The inflation of India came to around 4.3%, which is CPI inflation, yearly inflation. It is now down from the previous month of 5.22% to this month 4.31%. Drastic shift. This is very close to the lower band of the RBI comfort level, which is 4 to 6%. The kind of vegetable prices which are coming down in this month also, the expectation is, and from the higher base of last year, it is expected that the inflation in February will be around 4% only, which is very, very close to the lower band of RBI, which means that we will be having one more rate cut in April. So I'm very optimistic on these rate sensitive stocks like properties and real estate, autos and banks and all those things. These are big beneficiaries, and we'll see a greater impact coming forward. The core inflation is slightly sticky and slightly up, but that's fine because of the lower base. You will find this core inflation slightly going up, but it is below 4% from last 24 months. So the core inflation has now never been a worry for India. The food inflation was. The food inflation has come down from 10% to 6%, very benign now, and it has set the room for having a rate cut in April policy. One more rate cut probably can happen somewhere in September or October, depending on what is the policy of America, how US wants to bring in their rate cuts, and the currency things, etc., etc. But we'll not go so far. But one rate cut now in April is absolutely imminent. We'll get that rate cut now. So that's another thing which I wanted to bring in front of you. So this considering all these things and the way dollar index is reacting, I think rupee should form its bottom now. Whatever bottom it has formed down from 87.95 or 88 levels, I think that is a bottom. We should not see these levels going down, which is again a good comforting level for the FIIs. Yesterday also two more news came yesterday. One was the SIP flow, which is around 26,300 crores. So again at the highest level, we are almost the same as January level. So in spite of whatever carnage has happened into our market, SIP flow is still incoming, and it's a good news. I know there's a lot of controversies and a lot of talks going on in front of what Mr. Narain has said, who is the fund manager or CEO of ICICI Prudential Fund, that you should stop, you should come out of market, especially in small cap and mid cap. It's not like that. Small caps has actually corrected a lot. Now there are opportunities. I'm not saying all the stocks are still cheap or the mid caps are still cheap, but there are opportunities in pockets where you can choose relatively good stocks which are showing growth. I told this yesterday also that now there's are stocks available which have good earnings, good growth, and now available at good valuation prices. So you can start looking on all those things. And I don't think you should take out your SIPs and all. Indian story is far better than taking out the SIPs now. This is not a right approach. At least I don't agree to this particular thing. Uh, Another thing which has happened yesterday is that the weightage of India in terms of MSCI Global Index, it has increased from 18.8% to 19%. So our weightage is now increasing, which also means that if the emerging markets drawdown happens, more money will come out of the India, which is fine. That's perfectly fine. And that's not should not worry us. But in the global context, our stakes and our involvement into the world markets is continuously increasing, which is again a good thing. Paris summit happened yesterday. Yesterday, UK and US did not sign the pact of declaration on AI, which is fine. There were some rules and methods being presented, or let's say they were chalked down in terms of AI use, but US and UK refrained to sign that. But that's okay because they have their own investments done too much. UK was not worried about too much of their investment, but he has not done that. But they were not happy with some clauses on defense. US, we all know that they have done too much investment now, and they will take out all this investment by forcing AI across the world, and just wait and see that. So that's another thing. One more thing has happened is that is the spy head of US is now Indian origin. Might not be useful as such, and probably it is now looking that the gold has also topped out for a time being, according to me. And in fact, I think 1 month before I told that invest your money in gold, take your money out from equities, and you would have gained a lot. Now I think this is the time to book your profit in gold, and this is not the time now to invest in gold. We will see some corrections. I don't know whether the correction will happen in February, March, or April, but we will see some correction in gold. And probably now the gold has topped out for the time being. Reasons are many, many. I cannot go in. I'll not dwell into too much into this. But as of now, if on my advice somebody has gone into gold, probably this is the time to actually come out of the gold and book your profits. Going forward, probably that's now the best thing. Considering all these things, dollar index melting down, rupee getting stable, US market looking like topping out. They are into, to me, it's looking like they're entering into a bubble tech category. Trump finding difficult to put tariffs, inflation already high, Mr. Powell not in the hands of US. According to me, now the underperformance of India will now stop. Yes, if US market will fall, we will also fall, but we'll fall less. And if they will move higher now, we will move even higher. I think the differential of trades will now start reducing. There was the big reason why there was a lot of flow into the US markets was, and I told the figure in till December it was around $450 billion. In January itself it was $150 billion. So approximately 600 to $650 billion of money had gone from the emerging markets to the US markets. This will now stop, which means either the money will remain in US bonds because that is giving them a 5% return, or if they have to flow into equities, now the time has probably come to enter into Indian equities. And there are a lot of reasons for doing that now. So, and I'm not saying it will happen overnight or in this month itself. It might take March, it might take April, but now the scenario is set, the platform is set for the flows to start coming to India. So that's about the news. That's about the how the global markets have shaped up, and that's what the overall macros are looking like now. Indian inflation looking very good, around 4.2%, lower going. We're already into an interest rate cut kind of a trajectory. Our budget was good. Our banks are looking very good. RBI putting liquidity, all those macros, and the fiscal policy was good in terms of fiscal consolidation of the target of 4.4%. All these macros are looking brilliant now, and they are looking absolutely benign for uh, any of the fund to come in, any of the fund to come to India. So it is perfectly set, and there is no issue at all in this. Now come to today's market. I told yesterday also what will happen in today's market. We expect a lot of volatility. It happened. I actually wanted some more volatility to happen. It did not happen, which is giving me a feeling that probably one more capitulation is left out. I would have been happy if we would have hit the stop loss of 22,800, and then again we would have marched forwards. Or the range should have been bigger, 500 points. 200, 250 points down, then again 250 points up, then 100 points coming down. Then it did not happen. It was expiry day. I was expecting that. It did not happen. But yesterday's thing was telling that some of the shorts are being covered and long being added. I think that confirmation came from the F1 data. It happened like that. We also saw some buying from stock futures yesterday into Indian markets. It's again a good news that in the F1 segment they are buying. Today also, I will not be surprised that there will be some short covering data into it. I don't expect short will be added. I'll be really surprised if the shorts are being added today. But according to me, there will be some short covering. But the problem is that there's still a lot of shorts in the system. And these shorts will only come out when you start crossing the important critical levels, which has still not happened. So overall, so what I'm saying is today's market action was good, but not too good or too volatile to form a very good base and to confirmly say that that's the bottom. So either we would have closed around 23,150, which I was talking yesterday, but did not happen. We closed, although we closed about 23,000, which is a good thing. We also made 2 consecutive days higher highs and higher lows. That is also technically good. We added yesterday longs. That is also good. There was buying in stock futures. That is also good. Today, if we don't see any shorts being added and probably seeing some even short covering, let not even if the longs are not added, but we want the shorts to be covered and shorts not to be added. If the F1 data shows us this today, I think again this will be a one more path towards consolidation. I'm not saying we are out of the woods as yet. We may not see downfalls further, but that is one more confirmation of base formation. Let's see tomorrow how it happens. Tomorrow, what's the news from Mr. Modi and all those meetings which happened today? That will be a great impact tomorrow. Tomorrow market will be very important, very interesting. But I would have liked uh, some more shorts to cover up and some more volatility. We would have liked. Actually, yesterday's inflation report was so bad that we could have opened the gap down, but that all did not happen because the recovery happened in the US markets. So, anyways, that opportunity also was lost. Otherwise, if it would have happened, opened gap down, that would have given the chance for FIs to cover their shorts. But today there was good news in terms of inflation report and there was a lot of good news, and that's took the market forward, and they didn't get a chance to cover their shorts. So probably that action is still due. I will not be surprised if we'll be having around 1.5, 1.6 lakh plus shorts still in the system. And FIs with this kind of a scenario where the retailers and DIs have actually given up, they will not want to cover the shorts by taking the markets up. They are very easily they will cover the shorts by keeping the markets down. They are now full fledged. They have the muscle power and money power to do that because there is no competition for them now. So that thing will happen. Whether it happens tomorrow, day after, if anyways tomorrow we have a bad news, then probably we'll start breaking those 2200 levels. But if we have good news, still there'll be chances where you will see volatility and those markets coming down to cover those shorts. But that will be a good news. So if tomorrow we had a good news from US markets, this meeting between Trump and uh, Mr. Modi, and then if volatility happens again tomorrow, it will be a confirmation in terms of base formation, and that will actually give us much more comfort to add quantities. But I will still taken quantities. I don't know how many traders have taken, but that will give a lot of confidence in putting a lot of longs aggressively into our strategy. So this is the overall scenario. Mid caps and small caps, they are very, I would say what they're very threatened. So as soon as the Nifty goes up, small cap mid caps go up. As soon as the Nifty goes down, they also start coming down. So they are actually dancing on the tune of Nifty. So everybody today's scenario is dancing on the tunes of FIs. And that's the bad part. That's what I don't like. It actually hurts the ego of any Indian person who's participating in the stock market of my country. This is my country. This is not the country of FIs. Why should they dominate my markets? In US, the foreign capital into the US markets is only 3%. In India, it is 14-15%. So that is why the 15% money is actually allowing the dance to happen on then orchestras. Anyways, that's the thing. We can't help it. So that's the thing. Watch today's meeting with Trump and Modi, and watch for volatility tomorrow to happen. As much as the volatility happens, that is good for the markets. It will only consolidate and give confirmation of the base formation. So with this, I'll end my video today. Thank you. Thanks.